إن شاء الله.
بسم الله الرحمن الرحيم. والصلاة والسلام على نبينا محمد وآله وصحبه أجمعين. Assalamu alaikum wa rahmatullahi wa barakatuh, and welcome all of you to this public lecture on establishing a sound Islamic finance regulatory framework. We are glad to have with us Professor Ahcene, a distinguished Islamic scholar from Algeria, but do his um, work mostly in Malaysia. He is a lecturer in universities in Malaysia, as well as a Sharia advisor in a number of Islamic financial institutions. Myself, I'm a consultant, Khalfan Abdullah, with Brother Consult, as well as a head of product development and Sharia compliance for SIB Najah, that is based here in Nairobi, Kenya. We are very glad to have a Prof with us on this very important topic that our countries have always been discussing. And now we want to have this discussion ongoing towards the sound Islamic finance regulatory framework. Given his experience in different jurisdictions, we think we are having the right person to share with us his vast knowledge, as well as the experience in other jurisdictions on this topic. Without taking much time, once again, Prof, thank you so much for short notice and welcome and accepting our invitation to be with us this night in this platform. The floor is yours. You're most welcome. Prof, can you hear me? Okay, let's give him a second. He's still there online, but okay, has dropped. So let's give him a minute. Maybe he's trying to get a clear
Assalamu
position.
alaikum.
Wa alaikum assalam. Most welcome.
I think I've been
You can proceed.
disconnected. I think there is, yeah. Sorry for the disconnection. I think the line from my side. Bismillah ar-Rahman ar-Rahim. As-salatu was-salam ala Rasul kareem. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh. First of all, thank you, Brother Khalfan, for this opportunity. I really appreciate the initiatives and hope it will be a very fruitful discussions. We have a very short time of 1 hour. I try to summarize the key points maybe within 30 minutes. Then I would try to give more space for discussions, because the discussion is the one that give more provoking questions and brainstorm idea and provide some solutions. If you look at the following slide, the next slide, basically what you will see um, uh, is the ecosystem of the halal economy or the halal industry. This is a very important starting point just to understand that Islamic finance is not only about banking. Sometimes the understanding that Islamic finance is banking only, which is wrong. And sometimes the thinking is the Islamic finance is the only value proposition, which is only very wrong. It's about halal economy, it's the halal market, it's about the halal industry, where you may see Islamic finance is one of its components. And the next one is the halal industry. And the other one is the Islamic tourism. The third one, Islamic lifestyle. This is not, by the way, my classification. This is the classification of the OIC in their report. I just didn't show you the numbers and the reference, but there are some values and assets in each industry. And from that statistic, you will see that Islamic finance represents small component of, from the entire halal market. So the thinking is that we have to think in a very broader aspect. Don't confine the far beyond that. Now, if you look at the following slide, what we'll see that there are some kind of very key initiatives that basically represent Islamic finance. I will not go through on each point. Maybe this one will be shared with you, but I would just pick up some points just to reflect the status of Islamic finance, and among them the value, the asset of Islamic finance, which is close to 5 trillion US dollars. The Islamic growth year to year hits 11% on average, and we're talking about close to 2,000 financial institutions globally operating in a governance framework, sustainability initiatives, awareness, where this initiative is part of it, and also knowledge and research development. Now, one important thing, just to show that the Islamic finance crossed the borders of what so-called Arab country or Islamic country, and it's become a global phenomenon. And one of the evidences of this statement is that the IMF is subscribing to the Islamic finance, and they have departments. They have and the IMF and the World Bank, both of them, they have departments, they have research, they have publications, and they have even finding in some countries in Africa using an Islamic finance instruments. And shows that Islamic finance is not anymore regional, but it is more global. We have seen the Islamic finance operating in a non-Muslim country, like for example, Kenya is one example, talking about Singapore, talking about Hong Kong, China, Japan, talking about UK, France, Canada, US. US also, as you know, Lariba Bank was established many years back, and unfortunately, we just heard that the chairman of the Lariba Bank, Sheikh Yahya, passed away just last month. He's a founder of the Lariba Bank in the United States. It's operates beyond the Islamic jurisdictions. If we just take the example of Hong Kong, Hong Kong has issued sukuk issuance of ijara twice, and other many non-Muslim countries that have issued sukuk as well and adopted Islamic finance. Talking about Luxembourg, which is one of the hubs for listing of sukuk and other jurisdictions. This is just to show that it is not anymore propositions related to some countries, but it has become a global phenomenon. Now, if we move the following slide, which is, by the way, the last slide. That's last slide, but it's a bit comprehensive. It may take some time, so I try to brief it and maybe just point out the most key points that provoke discussions. And if I start from the left, which is the market authority, Islamic finance, number one, we have to understand that it's operate in a very comprehensive regulatory framework, in a very comprehensive ecosystem. And it should have a very robust, sound infrastructure. It should be very diverse. It should have banking, Islamic insurance, Islamic capital market, wealth management industry, stocks, money market, regulators, regulatory framework, Sharia board, and supporting institutions. This framework represents one of the benchmarks that any jurisdictions want to operate in Islamic finance should put this one as a benchmark. And in the future, it should lead to realizations of the main component that represent the pillar of the Islamic finance ecosystem. And without this component, I don't think the Islamic finance will operate in a very efficient and effective way. But if all the components are there, so a level of efficiency definitely will be there. So if I start briefly from the left, we're talking about the Ministry of Finance, central bank, security commissions, the deposit insurance system. We're talking about the stock market, and we're talking about the court and the alternative, or the ADR, alternative dispute resolutions, like arbitration, so on and so forth. So this one has to be in place. Because this is the authority, this is the licensing party, these are the supervisions institutions which are somehow government affiliated to ensure basically that the market is operating within law and regulations. And that creates confidence. to the shareholders and the stakeholders on the same side. Now, the second point is the Association for Islamic Finance. As you know, you may have a mini banks, like for example, in Kenya, you have a few full-fledged Islamic bank, you have a few windows, you have takaful, you have ritakaful, you have few pension funds, Islamic, you have an investment bank, you have a microfinance. So these institutions basically cannot talk to the regulators individually for some concern. Sometimes the industry has a common issues, maybe in banking, common issue in the takaful, common issue in capital market. So the associations will play a role basically to consolidate all these voices and represent the industry and basically table the issue and talk to the regulator to address some concern. So in practice, so those associations should be in place to help the industry. The other one is the international infrastructure financial institutions, and these are global, like Basel, this one, international accounting standards, those institutions, international chamber of commerce. In Islamic, we have this institution that normally support the Islamic finance. We have the IOF, which is based in Bahrain. Those institutions, they don't support the local jurisdictions or the country, but they support the Islamic finance globally. If you take IOF, it is a standard setting body, do standards on Sharia standards, accounting standard, audit standard, governance standards, and code of ethics. If you look at the IFSB, it is based in Malaysia. It is more, which is the international, the Islamic Financial Services Board. It is more on the prudential standard like Basel, capital adequacy, governance standards, and so on and so forth. If we take the IMF, which is based in Bahrain, it is more on the treasury advisory, setting standards. They have what's so-called legal documentations of placements, treasury, and they have a templates documentations which are approved, used by the industry for treasury transactions. If we move to SIBAFI, SIBAFI also is based in Bahrain, which is the General Council for Islamic Financial Institutions. Is the associations of Islamic finance globally. They provide training, certificate, and research and guidelines. The latest guideline by SIBAFI was on sustainability in 2022, and also followed by Maqasid guidance in the following year. And we have the ILM, which is based in Malaysia, provides short-term liquidity sukuk. And then we have the International Rating Agency based in Dubai and based in Bahrain, International Center for Arbitration, which is based in Dubai, and others. So these basically try to provide a kind of support to the industry to operate in a very efficient way. So if you don't have anything, so normally countries that are emerging countries will benchmark on this. They will get assistance, advice, guidance by this institution. Now, the other point is, which is in black color, it is industry and markets. So we have banking, like here in Kenya, we have banking, takaful, we have Islamic capital market, and wealth management. Wealth management, so you don't see it in many countries. But in the US and in the UK and Singapore and other places, it's moving in a very big way. And Malaysia has this Islamic finance industry, which is very important, which is typically born from banking, takaful, and Islamic capital market, because the the products and services offered under the wealth management and the financial planning are somehow affiliated either to banking or to takaful or Islamic capital market. But it is an industry by itself that have licensing, has requirements, and so on and so forth. Like, for example, in Malaysia, we have the Malaysian Financial Planning Council, which represent this industry, and it has around 17,000 members. Imagine 17,000 members, because it is a license function, meaning you have to get a license to practice. The other point, we have also called Islamic capital market and Islamic money market. Islamic money market, Islamic capital market is for long term, more than 1 year, and money market is for a product less than 1 year. And normally the money market is managed by the central bank, and the Islamic capital market is managed by the Security Commission. Now, an additional component in the following box is related to the microfinance and social finance, which are very important, and they represent part of the ecosystem of Islamic finance, and they represent what's so called the inclusions dimensions in Islamic finance. Because the issue here that we are putting on table is that banks underwritings and selections, and the same for takaful investment, they have certain benchmarks and levels. And this is why we see in the society a lot of non-bankable. We see a lot of people who are not eligible to financial services for even Islamic banks because of the requirements and the regulations and the financial standing of the individual. Then it comes the social finance through the Waqf institution, through Zakat institution, through the Sadaqat house, through the microfinance, through the micro takaful, play a role to address the concern of this group, which are not qualified to operate and achieve and have access to the financial services. And this is a very important component in Islamic finance to create a very comprehensive and complete ecosystem which is fair and just, addressing the entire population. Because if you focus on banking, you may disqualify a big group of people who don't have the financial means, they don't have the wealth, the sufficient asset to access the financial services. So the microfinance and the social finance will come to help this group to upgrade them progressively to access the financial services. Then we have in the fourth box, the black box, the fourth one, we have the crowdfunding, which is an additional platform that's operating in Islamic finance, where the startup companies, the new entrepreneurs, they will leverage on this crowdfunding platform to raise funds. And it is a very open, very transparent, and people, instead of going to the banks or to the micro institution, they may go directly to fundraising through the platforms and seek public and the crowd to finance them, and it's operating. And we have few successful institutions operating in Malaysia and other places in Indonesia that provide crowdfunding and also a kind of investment platform. We have in Malaysia the investment account platform, which was regulated by the central bank, but become a private entity, and we have others as well licensed by the Security Commission. Now, the second point is the digital banking, which is a very important segment as well, and it's coming in a very lot of institutions basically try to shift and leverage on the strong trend of the digital finance, and lots of Islamic banks start to launch digital banking platforms, which basically operates in a bit different way, leveraging of the technology. Now, the following point, which is the regulatory legal framework, which is a very crucial and important. And here we bring the central bank on board, we bring the security commissions and insurance authority. In the context of Kenya, we are talking about the CBK, central bank. We are talking about the CMA, the capital market authority. We are talking about SASRA. We are talking about RA. These are the regulators of the banking sector, Islamic capital market, and what's so-called the insurance industry. So normally this will provide support to the industry through various means and ways and approaches. If I take the example of Malaysia, so they have issued the Islamic Financial Services Act, meaning an act has been issued by the central bank. Of course, under the purview of the central bank, it is an act. And we have the CMCA Act of 2007, which is also belongs to the Security Commissions. And as you can see, you don't see here the takaful, because in Malaysia in the 1983 we have the Islamic Banking Act of 83 and the Takaful Act of 84. Then in 2013 they combine the Islamic banking and the takaful in one single act called IFSA. So they are combined, meaning that the IFSA combined takaful and banking, and CMA cover the Islamic capital market. Now, in addition to that, the regulators, pursuant to some clauses and within their power, they will be issuing some kind of policy standards and guideline to guide the industry. And this could be in, like, for example, a framework. Normally, they issue frameworks. Like in Malaysia, we have the Sharia governance framework that has been revised 3 times. We have guidelines, like, for example, the fee and charges guideline. We have, for example, standards. We have a policy documents on most of the country, around the 12 policy documents covering the most popular contract in the market, starting from the Murabaha and go to the other contract. Now, the following one in the yellow box is represent the educations and training. We're talking about degrees, master, PhD, professional certifications. And this basically to address the growth of Islamic finance, the gap, the shortage of the talent and expert. And here you cannot basically ignore them, because the industry, if it goes substantially, and at the end of the day, they don't find the professionals, the experts, to help them to grow that industry, it could be a concern and issue. This is why it has to go concurrently with the growth of Islamic finance. Now, the following box is a Sharia governance. Which is very important. As you can see, it has no color. And the reason being has no color to show the transparency of Sharia, the transparency of Sharia from the angle that Sharia is the core driver of Islamic finance. We are talking here about the Sharia board that represent an independent body represented by Sharia scholars that guide the financial institutions and provide Sharia pronouncement, provide fatwa and guidelines, and do approve the report, and basically the authority to ensure Sharia compliance within the financial institutions. And this one, it is a pre-process exercise on the Sharia compliance, meaning that the product before it is before it goes to the market, even before it goes to the central bank for approval, it has to be approved by the Sharia board. They look at the structure, they look at the term and condition, they look at the documentations, they look at the all related documentation, and make sure that the product operating according to the rules of Sharia and its guidelines and principles. Upon the approval, so it goes to the central bank for a second screening, and upon the approval, you go to the market. Now, after the product goes to the market, the other control functions comes in on board, like Sharia compliance and the Sharia review, where they review the products, how it is executed, how it operates, how it functions. Is there any gaps? Is there any problem? Is there any discrepancy? Is there any mistake? Is there any documents has been missed? Document has not been signed? The contract has been executed or not? The structure has been honored as per the guidelines of the Sharia board. Anything goes wrong, it has been overcharged or not, has been charged something which is over what has been agreed upon, and so on and so forth. So it has they have the kind of checklist to make sure that everything is there. Then we have the Sharia audit, which is the third line of defense, which is independent, report directly to the board that provide the Sharia assurance. They do the same exercise and report to the Sharia board. And as you can see, there is a kind of Sharia departments in-house to ensure the Sharia compliance. Then there is Sharia board to ensure the Sharia compliance. This is a pre-process Sharia compliance. Then post-implementation, you have the Sharia review. Then you have the Sharia audit. And before the Sharia audit, you have the risk management, because the risk management also do a testing and do kind of checks as well. Then you have the Sharia board. So all these levels of screening, from the first line to the second line to the third line of defense, the objective is to ensure that the product is Sharia compliance, no mistakes, no breach of Sharia rules and requirements, and this is to honor basically the mandate of the licensing, because the license, if it is given, it means you have to comply with the Sharia rules and requirements. And the last box on the green on the right side is talking about the supporting institutions. So in the ecosystem, you need the supporting institutions to work with you. You need the legal firm to draft the documentation. You need the Sharia advisors to help you in some consultants, in some activities. You need the professionals qualification provider. You need the education's qualifications. You need the rating agency if there is a requirements for rating, especially in the sukuk area. You need the trustee company if you need the kind of investments and fund investments and sukuk. So the trustee will come in a form of SPV. You need the fintech providers to provide you solutions, core banking, mobile banking, and other related fintech platform and solutions. You need the Islamic finance news, the journal, magazines. You need the research house. As we mentioned in the previous second slides, there are many research that been undertaken, many seminars, research house that produce books, magazine, blogs, and so on and so forth. You need the media platforms. You need an exchange of what's so-called and commodity platforms that either you list stocks, you list, for example, tokens. Like in Malaysia, they have a seeking exchange of tokenizations and tokens. You need a platform from commodity murabaha like Able Ease, like Bursa Malaysia, like Sedania, like Shuraka, and others. So as you can see, if all the components are in place and everyone is doing his job and everyone in support others, so we have a very comprehensive ecosystem, resilient, robust, efficient, and effective. Each one complement the other one because you cannot operate in isolations of the other component. But in some jurisdictions, we have to agree, you don't have this comprehensive infrastructures. But normally in an emerging market, there is a plan to reach there. Meaning you have to start somewhere. You may not have the act, you may not have the regulations, you may not have the stock market, you may not have this, you may not have that, but at least you start somewhere. But your vision, your long-term achievements is to achieve this comprehensive ecosystem because when it comes to innovations, when it comes to structuring of the product, if you don't have this resilience and if a comprehensive structure, you may have a problem because um, some of the products are integrating all the components. Just give you a very example of one product, like for example, product link products in Takaful. So it is Takaful product offered by the bank. And in its structure, there is a link to the Islamic capital market when it is linked to the fund. So you can see the one product bring banking, Takaful, and Islamic capital market all together. So imagine if you don't have one of the component very resilient, so you'll be lacking to structure very innovative product that basically will suit uh, and serve the interest of the what's so called society in a specific country. I think I will rest my case here and stop. I just closed 30 minutes just to summarize the key point to give more time for engagements and QA. With that, thank you very much. And Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh. And I pass back to Brother Khalfan.
Thank you so much, Prof. I really appreciate it. It is a journey, one step after the other, but this is the bigger picture. This is the bigger picture of a sound Islamic finance regulatory framework that we should have players, different orientation or focus or professionals play their part towards the framework or towards establishing the comprehensive framework. Now we will let our participants to ask few questions. We'll start with those who are in the platform. I have a number of questions were sent by the participants when they were registering, but I'll give the opportunity those who are present with us to ask. I'll start with Salum Lupande, then Amina will follow next. Brief, Brother Salum, your point or your question. so that we can hear the other questions that I have received from the participants. Brief and straight. Salum.
Yes, Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you very much, Prof, for this, as you said, very, very brief, comprehensive introduction or capture of the regulatory framework. My very quick question is, in the diagram, we have two parts which to me, they are a bit confusing to me.
Okay.
The market authority and the regulators or legal framework. What is the difference between these two components? This is my main question.
Yeah, thank you very much. Yeah, there is I agree there is a overlapping there, but the first one, what I mean is the authority, meaning representing the governments that are mainly the custodians of the and the supervisory and the licensing part that involve in the Islamic finance, which are somehow a government or semi-government related part. This is why I put them under the authority. Direct regulation. Central bank, security commission. Central bank look after banking, security commission look after Islamic capital market, and insurance look after takaful. So these are the three main regulators. So this is why I put them in that sections, the regulators, even though they are a bit mentioned up there, but from the angle of being an authority and government affiliated institutions. That's the segregation. But I agree. I mean, the same here could be observed over there also. Shukran.
Thank you, Amina.
Assalamu alaikum.
Salam.
Prof, thank you so much for your insight. I just want to your comment in regards to the growth of this regulatory framework, because most of the African countries, Kenya included, have fragmented laws that touch on Islamic finance. So in your opinion, and from this chart, in terms of priorities, for example, in terms of priorities in, let's say, establishing of an Islamic capital market, which we don't have right now, what do you think is a priority, like a building block? What do you think we need to start with before getting to where Malaysia is?
Yeah,
Thank you.
Yeah, shukran, sister. I mean, I think maybe we'll start with the banking, because banking, we have a lot of players in the banking, full-fledged Islamic Bank, Windows, and some others in the pipeline coming. So since the market is dominated by Islamic banking, maybe the first quick concern and focus and priority will be on the banking. I think the second one could be on the insurance. I mean, Islamic insurance, because we have a takaful operators on the ground here. So a takaful operator is required. Then maybe the third one is the Islamic capital market, because for the time being, we don't see much activities on the Sharia compliance stock listing. We don't see much on the index providers player here. We don't see much investment bank. We have only one investment bank, which is not maybe very aggressive for the time being. So if I put the priority, it will be banking, takaful, and Islamic capital market. Then you keep expanding of course, like governance by default, it is there, but you keep expanding to act, to guidelines, to policy, to standards, and so on and so forth, when and where needed.
Yeah, thank you so much with that. Actually, in these building blocks, we see in our market a diverse experience. Ugandans started with the laws, regulation, then they went to establish Islamic banking. Tanzania, it is a mixed experience. On the takaful side, we had to wait until takaful regulation was developed and issued before we could have any takaful. But on the banking, the central bank regulator had a different approach. Let the player come to the market, then the regulation will follow, which is what we are expecting to come next. And this has been maybe also the experience in other other places. So thank you so much for all these questions and these and the feedback from the Prof. Now, I will pose other questions which I had received from the participants while registering, Prof. And the first question goes like this. Is there a centralized system for approved fatwa? And I know you have recently written a book on fatwa.
Mhm. Yeah, for this question, it depends on the jurisdictions. We have different models. We have centralized. Basically, we have what's so called double layers of the. If you can go back to the previous slides, maybe you can see the numbers. If you go back to the previous slides, it will help. So maybe here, I think there is somewhere here governance. Here, countries with at least one type of Islamic finance regulation, 71 or countries, and box no number with this disclose. No, hold on. I don't think there is a here. No. Sorry, it's got representation about. Anyway, it depends on the jurisdictions. Like, for example, Malaysia, it has two tiers structure, meaning central at the national level at the financial institution. Same for same for UAE, Malaysia, Pakistan, Sudan, um, Algeria, Morocco, and some others. So you see Indonesia, I mentioned it. So you have Oman also. So you can see some jurisdictions, they have centralized Kuwait, but Kuwait is not really binding. Those jurisdictions, they have a central Sharia advisory board, either at the central bank level or at the somehow affiliate independent but affiliated with the regulations. But most of the practices, it is affiliated with the central bank. These resolutions, their resolutions are binding like law. Each form part of the compliance, meaning that if the Sharia board or the financial institutions want to issue a fatwa, resolutions or decision, they cannot contradict the resolution of the Central Sharia board because their resolutions are binding. This is why you have the law, they have the central bank guidelines, central bank framework, central bank policies. Then you have the resolution of the Central Sharia board. So all these are regarded a mandate you comply with. Then when it goes to the institutions, they have to take decisions without contradicting the resolutions of the other countries, like for example, like example of Kenya, Uganda, and others, they don't have a national centralized Sharia board, and the decisions is left to the Sharia board at the respective financial institutions. So again, it depends what's the direction of the central bank. If the central bank want to take ownership, if the central bank want to get involved, if the central bank want to take the lead and drive, so they may consider that. If let's say there is a push from the industry to consider Sharia board level, even not affiliated with the central bank, but empowered by the industry, it becomes decisions and the choice of the market. But as of now, we have two-tier models. Some countries, they have two tiers. Some other countries, they have only one single.
Thank you so much for that. My addition would be maybe in our countries, since we don't have centralized and so on, but we have central or regulators. My thoughts will be regulators could try to collect the fatwas from different players just for knowledge purpose and disclosure and transparency purpose for the public to know what the Sharia boards of different institutions have ruled on different matters presented to them. This is just for knowledge, not for making them binding for any of the players in the industry. What do you think, Prof?
I just want to I just want to add on your point here. You see, there are the requirements of Sharia of IOFI basically is to make the fatwa available publicly on the website of the Islamic Bank. But unfortunately, not every bank is doing that. Some banks they do that. If you check the banks, the Islamic banks of UAE, because the IOFI is in force. IOFA is enforced, so it's a requirements. If you check the Islamic banks of UAE, you can see the fatwa. You can see the fatwa. You can download it, and you see all the names and their sign off on the products.
Thank you so much,
Other
Prof.
jurisdictions, jurisdictions, they don't have this. Yeah, it
Thank
depends.
you. I want to rush to another question. We have a number. So this one is asking, at what stage of any Islamic financial institution should a Sharia advisory board be established? And can it be Islamic without the Sharia board? Can an Islamic financial institution be Islamic without a Sharia board?
Uh, the answer is no. You cannot have an Islamic without Sharia board, because Sharia board is basically become a regulatory requirements. It is a Sharia governance requirements, a regulatory requirements as well. So it is in the submissions, in the application, the Sharia board is part of the documentation required by the central bank to approve the licensing.
And with that, it means it should come at the initial stages, because of course its role is, among
Yeah, by
others,
right.
to approve
Yeah.
the products and the legal documentation that will be used. Thank you so much. I'll move to another one.
Yes.
How is the firework expected to restore, or rather bring about, Muslim confidence with Islamic financial system? Is there a mechanism to mitigate or to restore Muslim confidence with Islamic finance system?
Yeah, I think that one maybe, in my view, it will be more on the awareness. To me, is more campaign, more awareness initiatives, uh, more efforts to explain the value propositions of Islamic banking in the social media, in the websites, in the events, and so on and so forth. And to support that with a proper disclosure, to support that with a proper disclosure. Uh,
Sounds like we're not hearing. I hope it's not just me. So let's just wait a bit. Maybe the network has been shaky. Yeah, it looks like he has dropped, but let's give him a few minutes. He might rejoin. Unlock, Prof, unlock.
yeah, I say sorry
Unmute.
again.
Yeah.
Is
Yes.
bad. It's my point. I hope you got the message.
All right. Actually, we were not able to hear, um, but
But
the
basically,
message
what I'm
was,
trying to say is,
but the message was clear in terms of
yeah,
awareness and disclosures
yeah,
to address this issue.
yeah,
So we picked it some few
yeah.
points there. I'll go to another
Uh,
question. In your view, what is the role of central bank in promotion of Islamic banking system?
Wallahi, honestly, the central bank is I may say, the number one mover. If the central bank take the ownership, take the initiative, take the lead, the Islamic finance will flourish substantially, and the growth will be visible, because central bank has this power of authority, and every institution respect the direction of the central bank. If the involvement of the central bank is less, I think the growth and ownership of the central bank and creates and so on and so forth. And in Malaysia, basically the lead of Islamic finance has been undertaken by the regulators, mainly the central bank.
Thank you so much. I'll go to another question before the last.
Can you hear me?
Yes, yes, I had you. Okay. What are the experiences in terms of capacity building? What level of education, primary, high school, or tertiary level, do we need to introduce Islamic finance to the young ones? Prof, are you there? Yes, go ahead. We can now hear you.
Yeah, I say, can you repeat the question? Sorry, I was being
Yes, it,
disconnected.
it, it was related to at what level of education, primary, high school, or tertiary level, do we need to introduce
Yeah,
Islamic finance to the younger ones?
yeah, I think even in Malaysia, they start thinking about the kindergartens in the primary school, because it's part of a culture. Try to disseminate the knowledge from the primary school in a very basic thing, and you like the language, a foreign language. Foreign language, you start studies from early on a basic, then you grow slowly and progressively. So then you master the language if it is a second language. So I think for the education's level, to me, it's go for the primary school, but of course it has to be designed in a very simple way, and the complexity of the informations and expansion of the knowledge will go according to the levels of education.
Thank you so much. My last one is how to unlock a slow-moving regulation process.
Well, I think definitely through lobbying. Um, and to me is to show also the industry interest and passion about Islamic finance, to show increase the demand by the public, expansions and growth of Islamic finance, and more importantly, like as you know, the association has been established. Maybe the associations will take the lead to collaborate with the institution, with the central bank, put the demands, represent the industry, consolidate their view, and they can push to the central bank and the various regulators uh, to give some kind of considerations and incent social media. It doesn't go anywhere, but the industry represented by associations represented the industry voice. Then the associations can basically talk to the regulator. Don't wait fines and draft and so on and so forth, because they need expert, they need to initiate department, they need the costing and funding. But what you can do, you can still negotiate with the regulators to do the job. Of course, it is expensive on the shoulder of the industry, but it is good, meaning that the industry through the association can draft the Sharia governance framework, can draft Sharia audit framework, can draft even some comments and guidelines, improvement of the existing act, can present a draft of an Islamic banking, and so on and so forth, can provide guidance, can provide the policies. So they can do somehow the job of the central bank and present it to them as a draft. Then the process will be much quicker. But if it is left to the central bank to create departments, hire experts, put a budget, put plan, I think it is a time consuming.
Thank you so much. I think with that, we come to an end of this session. Much appreciation to Prof, as well as to all of you who have made time to join us this night. Just a final word from the Prof, if any, before we close this.
Yeah, yeah, it was a pleasure to be in touch with the Kenyan market here, and my thanks and appreciation to Brother Kharfan who facilitated this session. Inshallah, we meet in the future. Bi-idhnillahi ta'ala.
With that, we come to an end of this session. Once again, much appreciation to Professor for being with us in Kenya. And I pray to you and your family back home when you're traveling very soon. I hope so. And I wish you a safe journey. And I hope to touch base with you once again on different subjects related to Islamic finance. We appreciate and we wish you all a good night. Ma salama and bye bye. And now I will close the session.
Salam.
Bye bye. Ma salama.
Thank you. Shukran. Wa salam.